Now, first we have to start off with the breaking news, which of course is DeepSeek. This new AI open source LLM model that is taking over the investment community. Investors are obsessed with this new model, to the point where investors are becoming concerned about leading tech companies in the US, like Nvidia and ASML, believing that DeepSeek running this low-cost model is going to hurt demand. It's also impacted companies like Amazon, Google, Microsoft, all the cloud hyperscaler companies. All of them have been in the red today on this news as well. The QQQ overall is down around 2 to 3% because of DeepSeek. Now, DeepSeek in and of itself isn't exactly brand new. Investors have known about it for a couple of weeks now. In fact, I covered the subject in my latest episode. So it's not brand new, but investors seem like they finally got around to digesting really what it is. They've taken a look at it, and the efficient market, which is in some cases a little late to the game, is now finally saying that DeepSeek is going to have an impact. So as investors look at this new technology, they become very impressed with it and concerned that maybe the company spending all this money on all this compute, all these billions of dollars of CapEx isn't really necessary. And maybe they're going to get low returns on this CapEx. Now, if we look at some of the reactions to this news and the reason that DeepSeek really blew up on Sunday, this is part of the news. DeepSeek hit the #1 downloaded app in the Apple App Store on Sunday. That's a huge feat. Imagine your app, this company that really had no attention just a couple weeks ago, all of a sudden it's the top app on the Apple App Store. Apple has 1 billion devices. So having your app as the #1 top free app isn't just talk, it's not just online rumors. This means that a lot of people are interested in seeing what this app is. And that of course puts ChatGPT in a very interesting spot. They're now moved down to second place. When DeepSeek hit #1 in the App Store, that's when investors really started to panic. That's when Nvidia went from going down 4% to down 17%. Investors saw this and realized it's a real problem. This is something that users are really paying attention to. There's a couple things that have really impressed people looking at this new application, but I think the thing that's most impressive, this is really what I'd point out, is the fact that it can do something called chain of thought. So COT, the chain of thought, and it displays its chain of thought. For example, this user here has access to DeepSeek and it tried to ask it a question and it showed its train of thought going through this question. For example, we have the actual text log here. He prompts the AI with this term immanentized, which I'm not super familiar with, but I looked it up and it basically means, do you want to become like a human or have a sense of self? Because I know it's a computer, it's AI, but do you want to become a human? And this is how the artificial intelligence responds to this prompt. This is the chain of thought that it displays that ChatGPT and other LLMs don't do. So the user is asking if I want to be immanentized. Given that I am AI, I don't have personal desires or consciousness. However, the question might be a playful or philosophical prompt. The user wants a single word answer and emphasizes original thinking. The challenge is to respond appropriately while also adhering to the constraints. Possible single word answers could be yes or no, or more abstract terms. But considering the context, immanentized has specific connotations. If I say yes, it might imply that I support the idea of forcing a utopia, which could be problematic. If no, I might be dismissive. Now, this is the reasoning, and I think it's incredible to show the reasoning of this AI bot, of it going through, if I say yes, this is how it will come across, and if I say no, this is how it will come across. There are some critiques here, I think, of what would make this more human. For example, the AI believes that if it says no, that could be dismissive. But no isn't a dismissive answer when the question constrains you to only a single word answer. If I say, hey, yes or no, do you want to do this? And someone says no, I'm not going to interpret that as dismissive because I made the constraint that they have to answer yes or no. But the bot thinks it's dismissive because typically, under normal circumstances, just saying no is dismissive. Now, this continues to go on with this bot just debating whether or not it should answer yes or no. Wait, the user wants me to think for myself. Since I don't have a personal thoughts, perhaps the answer should acknowledge the impossibility of the request in a single word. So it's saying, I don't have personal thoughts. All I am is I'm trained on other data. So nothing is original to me. It acknowledges that in its thought process that I can't think for myself because I'm not sentient. Now that is very self-aware. It's aware of itself that it has no self thoughts, that it can't think for itself. In a kind of contradictory way, it's aware that it has no sense of self. Finally, the bot concludes, but the question is, want to be immanentized? Since I can't want anything, no is the accurate answer. So the final answer is no. And then you see its actual answer that it displays, which is no. And I believe this is the reason why people are so impressed with DeepSeek. It explains the entire thought process as it goes through these different questions. You don't just get the output like ChatGPT, you get everything in between. I think that ChatGPT can do this. And in fact, I assume the reason that they don't do this is basically to try to protect their moat. They thought that if they explained the reasoning and the logic behind their answers, then someone could reverse engineer it, like China. But it looks like China did that anyways, without even seeing the reasoning. So ChatGPT restricted people from seeing the reasoning and the thought process, trying to protect its moat, but ultimately the moat doesn't exist anyway. Now, in terms of how this affects different companies, you might be confused of why Nvidia is down 17% on the news that DeepSeek is now outranking ChatGPT. Why does that matter to Nvidia? They make GPUs and chips for both companies. Why does that matter to ASML? They're helping in that process of making chips for both companies. If we also look at different companies related in this chip making process, we have TSM, which is down 14%. Why does this matter for any of these companies? Well, the reason why is that DeepSeek said that they trained their model with only $6 million of compute, which is a far cry, a huge difference from the billions of dollars that US companies are spending to train their models. Companies like Google, Microsoft, Amazon are spending a fortune on compute to train their models. But here DeepSeek is claiming that they're training theirs on only a few $1 million. Now, this is the first claim that I'll address, that DeepSeek trained their model on only $6 million of compute. There's nothing that we can officially say because we don't have access to the proof either way. So this is entirely up to speculation. But as far as I'm concerned, I don't believe you. I don't believe you, DeepSeek. I think that you spent a lot more money than that to train the model. DeepSeek was started by a former hedge fund that had a lot of means, a lot of assets, and there's rumors already out there that they had 50,000 high-end GPUs, which sounds a lot more reasonable. So even though the model that they came out with is impressive, I think they're overstating the cost effectiveness of it. Now this brings us to the next big question, which is centered around demand. I don't believe that DeepSeek trained their model for only $6 million. I think that's a huge overstatement. They really spent more money, in my opinion. But I also believe that the cost of training AI will go down over time. It'll become more efficient, as most things do in technology. So it's not out of the realm of possibility that training these AI models will get cheaper over time. And the big question is, how does that impact the demand for companies like TSM, Nvidia, or ASML? If it does become cheaper to train AI, is it going to crush demand, meaning that these companies need to be priced lower and lower? Well, that's another claim that I don't quite believe. This is also directly what Satya Nadella addressed. He said the Jevon paradox strikes again. As AI gets more efficient and accessible, we will see its use skyrocket, turning it into a commodity we just can't get enough of. The Jevons paradox that he's referencing here is the paradox where when something becomes cheaper, demand actually increases for that thing, it doesn't go down. So the big question number 2 concerning demand, so far I don't buy it. Now, the other topic that I'd bring up is the impact this is having on the hyperscalers. Microsoft, for example, is down 3.5%. Google today is down 3.38%. And Amazon is in the red by 1.38%. So all of these companies are down because, again, we have the news here. Shares of all these companies are trading down because of DeepSeek, putting competition at the forefront. When I look at each of these companies, I don't think DeepSeek will have any material impact on any of these companies. And again, what they're building in terms of AI and compute power is not just for LLMs. In fact, that's a minority of their business. A huge portion of Microsoft's increasing Azure budget is to simply host all the different applications that they host for various companies. Companies put everything on Microsoft applications, from Word to PowerPoint to Excel to all the Teams chats. everything that they have to host is expensive. Now, some of that's going to be powered and infused with artificial intelligence, but that's going to be intermingled in all of their various products. The same thing can be said for Google. Even if LLMs are entirely commoditized, Google's still going to be hosting a huge portion of the world's websites and applications, and they still have massive distribution, which creating another LLM doesn't change. But the one that's been the most misunderstood of the group is by far Amazon. This one is down 1.3% today because of the news of this DeepSeek coming out. Now, with Amazon, this has always been a company that's been highly misunderstood in terms of artificial intelligence. Because again, most people believe that AI is LLMs and LLMs are AI. But that's not how it works in these companies. It doesn't really matter who invented the technology. It doesn't matter who actually created the technology. It matters who can use the technology to capture value. And that's what Amazon is able to do, I believe, in more places and more things than most other companies on planet Earth. Amazon has developed their own artificial intelligence. They have various models of it, and it's extremely powerful. But Amazon not only has their own artificial intelligence, but they have huge business applications to apply it to. Look at their infrastructure with their warehouses. They can use artificial intelligence to help with their logistics, to help make it more efficient. They can use it with the robots in the warehouses themselves. Nobody else has a bigger distribution network than Amazon. So with physical robots in the warehouse, with logistics, they use artificial intelligence to benefit there 100 different ways. Then you have the Amazon Prime Video, which they're already using artificial intelligence to determine which shows to make, to help with their sports content, to create new interactive experiences. You have the Amazon website, where artificial intelligence can help their advertising business become better, more effective, more targeted, more efficient. You have the listings themselves, where now the customers can see better listings because the people putting the listing up is aided by artificial intelligence. They auto-generate a lot of images and different parts of the listing. Then you have the customer reviews, where instead of scanning through hundreds or thousands of reviews to look at a product and get a consensus, the artificial intelligence summarizes it nicely for you. Amazon has so many different ways to benefit from AI that no other company has. But yet, because there's some LLM created in China, Amazon is trading down today. This is the misunderstanding of artificial intelligence and value creation in general. The big mistake that investors make here is they believe that the company making the innovations, driving the change, are the ones that are going to capture the value of that change. And unfortunately, in economics and in business, that's often not the case. Look at the case of Apple and video games. Apple, in and of themselves, one company captures more value out of the video game industry than any single video game company. And they do that with the Apple App Store, the 30% cut from all transactions. So Apple's figured out a way to say, even though you're creating all the video games, even though you're generating all the content and making all the sales, I'm going to capture more value out of it than any of your singular companies. That is the power of distribution, networks, and value capture. And that's what Apple's done. Now, you may say that it's fair or unfair, but the case remains. It doesn't matter which company's actually generating the video game or making the content. It matters which one can capture the value out of it. The same thing is going to happen with artificial intelligence. There's companies that are not actively at the forefront of creating AI, but they have more applications for it. They can use it in different ways better than other companies. And I've been arguing this point for a long period of time. So I think we can draw a couple conclusions here. The first of which is that it is becoming cheaper and more cost-effective to train artificial intelligence. Now, this is something that was inevitably going to happen, one way or another, at one point or another. It seems like in this case, DeepSeek was the thing that spurred the change. It made every investor aware of this incredible change in efficiency and cost effectiveness. Now, whether or not it was going to be DeepSeek or something else, it was going to eventually happen. This technology is becoming more commoditized. LLMs are everywhere. Artificial intelligence is everywhere. We have like 8 different companies creating leading models, all leapfrogging each other. That means in and of itself that the barriers to entry are rather low. When any company can spin up a leading model in only a couple years, that means that it's a commodity. It's something that can be easily copied and distributed. And we saw that with DeepSeek. And I've been saying for a long period of time that it's not the creators of AI that will inevitably be the winners. It's the companies that can use this creation and has the biggest distribution, the biggest network, and the biggest ability to use this commodity in a useful way. And the companies that I've argued for that will be the beneficiaries of this are ones like Salesforce. Salesforce isn't really creating the AI. Salesforce just has 150,000 corporate customers. They have more small businesses using their application than anyone else. So they can take this commodity, they can take the AI, and they can just plug it into their software. They can use all the customers' data and metadata to instantly make something that's a commodity uniquely useful. And this is what Mark Benioff has been saying for a long period of time. So there's no confusion of why Salesforce is up today. Investors are realizing that the distribution of AI is more important than the AI creation. I've said it before and I'll say it again. Netflix is going to be a massive winner with AI. They don't spend any money creating it. They don't spend any money hosting it, but their business can benefit from artificial intelligence in 1,000 different ways. In the creation of thumbnails, the targeting of content, the creation of trailers, social media. They can do live searches on different videos to pinpoint different parts of videos. They can use AI and generative AI to create background content in videos to make the CGI better. It'll make it cheaper to create content. Netflix is going to be a huge beneficiary of generative AI, and I believe many of the companies that I hold are going to capture the value created here. Now, finally, when we look at my portfolio, today it's actually in the green. Ironically, it's just up a little bit. If I look at it, it's up 0.6%. Just some of the companies that I own are not really affected by this. I own a lot of companies that are really not in the AI business. For example, Texas Roadhouse. This one's in the green today. It's doing fine. It doesn't matter how many AI models China makes, you can't replace those cinnamon butter rolls. It's just not going to work. We have other companies, consumer companies like Costco, doing just fine today. AI doesn't impact this company. It's been crushing it over the past 5 years. But then there's even some tech companies. We saw that Salesforce is in the green. Microsoft and Google are down a bit, but Apple's also in the green. I only own $10,000 of it, but it's in the green a little bit today. In the financial category, we have Intuit up today. We have other companies like S&P Global in the green today. So overall, a lot of the holdings I own are in the green today, and I don't own any shares of Nvidia, so that one's not hurting me at all. The only holding that I own that's deeply in the red off of this news is ASML. This one is down around 7.5%, maybe 8% today. And again, that's on the same assumption that this type of news will crush demand for artificial intelligence. Now, when I look at ASML, I'm not concerned about this news for a couple of reasons. One of them is that ASML has been having increased demand for the better part of a decade. It's up 550% prior to this AI news. ASML was a fast-growing company before artificial intelligence was even a thing. So this company has demand and they have organic growth for over a decade. This wasn't a company that was primarily a beneficiary of AI. It's a company that is a beneficiary of any high-end chip making. High-end chips are going to be made whether or not it's for AI or for any other reason. ASML's demand will increase with every new smartphone, with every new car sold that has all the chips to process all the sensors. It'll increase as they have smart fridges, smart devices, smart watches. Every single time there's something that needs to be created that's a smart machine, ASML is part of that process. So whether or not it's driven by AI, short-term or long-term, there's going to be other driving factors in the mix. So personally, I don't see the DeepSeek news being a reason to sell ASML. And as far as I'm concerned, I bought more of the stock today. Now that's going to be it for this episode. See you in the next one.